The JSE has attempted to fight back from earlier losses in a subdued global market climate. Mute trade had been the order of sentiment this week ahead of the latest U.S. inflation figures. At the same time, U.S. GDP improved less than expected and warmer Japanese reading that pushed investors into a cautious stance earlier in the week. Gold, on the other hand, is still holding steady while oil registered more losses. Analyst Roy Mutooni speaks to us now. Thank you so much for your time, Roy. It is a slightly better picture on the JSE, but this could turn, especially because the U.S. inflation number has come in. Talk us through all those dynamics.
Yeah, absolutely. Thanks for having me. So today was actually a positive day on the bourse. The top 40 is up just under 1%, led by the gold, so Goldfields, Harmony, and then a couple of the others that issued trading updates or results today, such as Sanlam. So broadly positive. You're right about the U.S. inflation reading. This was the PCE indicator, which the Fed really relies on. It's still higher than the 2% that we've all been targeting to see interest rate cuts, but it's moving in the right trajectory broadly, pretty much in line with expectations.
Let's touch also on commodity performance. So we've seen movements in oil, but gold holding steady there.
Mm-hmm. Yes, gold's actually held up pretty well over the past week or so. Oil's come off its steady $80 barrel level. It's looking lower than that for now. But apart from that, very little other movement in the other commodities. Palladium slightly up, platinum flattish, but yeah, nothing else happening in that space.
What then is to be said about developments with regards to emerging market currencies, in particular the rand?
So on a year-to-date basis, emerging market currencies have all gone backwards relative to the dollar. It looks like dollar strength is still dominating the scene here. The rand, on the basis of a year-to-date reading, is down quite a bit. It's down about 4%, give or take. And for the week, it's basically flat, marginally down. But that's pretty much the case for all the emerging market currencies as well. It's a little bit of a concern because the dollar has weakened. So for these currencies as a whole to also be weakening just tells you that, there are big individual risks that seem to be priced into the currencies.
Lastly, Roy, what's been the reaction to the local producer price inflation numbers in South Africa from Stats SA?
So that's come in the midpoint of that inflation targeting range, somewhere about 4%. So it just shows that there's very little cost push inflation that's coming through the system. It's very much manageable, and I think it bodes well for the next reading on the consumer side, and probably gives the MPC some room to think about rate cuts at some stage this year.
Thank you, as always, for your input. Roy Mutooni, Sanlam Investments analyst there, talking us through the latest market developments. A better day on the JSE.